Good morning. So it is Friday. I haven't taken that many trades this week, but here's what I'm looking at. For the weekly chart on the S&P in the top left here, this is our weekly candle. We're printing a bullish up close candle. And if you notice, we have this SIBI fair value gap right here that we were coming into. And we just fell short on the weekly of 50% of that fair value gap, which ICT has been talking a little recently about how, that's a really good indicator if you see us fail to meet that we're going lower. Going to the daily, remember that what I just said, that 50% level. So on the daily, we have this fair value gap that we've been spending some time in. We haven't been able to close above 50%, a body above 50% on the daily. So our narrative is we're coming back into this inefficiency to go lower. We see it on the weekly. We see it confirmed on the daily as of right now. So I'm expecting lower. We're expecting lower prices. We have a Friday though, so we're expecting lower prices next week. We left this fair value gap, and now we're coming back into it right now. This is the 15-minute. I called out this SMT divergence between NASDAQ. If we go to NASDAQ real quick, you'll see NASDAQ had these really smooth highs right here. These highs were way too smooth. I wanted them to be taken out. I thought they were going to be taken out on NASDAQ. What I was curious about was whether ES was going to take out those highs. With ES taking these highs out, I am a little hesitant to go short up until kind of 9 o'clock. I was planning on going short for the day. If we were staying below this 4-hour fair value gap and below this high, I really liked shorts, but now since we're above it, I'm going to kind of sit on my hands and watch a little bit. I thought we might come up here just because, like I said, NASDAQ, these highs were really smooth. So I knew we were probably going to go up and take them. I also, we just left this daily fair value gap, but coming back in and bumping the bottom of it didn't seem like an unlikely thing. We also have this very large fair value gap on the 15-minute, and which is just a bigger fair value gap on the 1 hour with these up close candles. So as long as we don't get above this swing high right here on the hourly, I'm okay. As long as these up close candles keep price down. I like how we are kind of rejecting this daily level. You can see it even on the 5-minute. So I am kind of looking for shorts today. I want to watch the opening range just to, get a better gauge of sentiment. I like this. This is a daily candle low. If you go on the daily, I like this candle for a downside target. And also, so that's that daily candle low for external range liquidity. Also, if you look on NASDAQ, these are equal lows right here. So this is that same daily. It's yesterday's low on NASDAQ, which is an equal low. Look how smooth that is. That's beautiful. I mean, I think NASDAQ is actually looking pretty nice in terms of like displaying its liquidity right now. I think I'm going to stick to trading ES, but I'm going to use that narrative in mind with NASDAQ. I'm going to let that also influence my narrative. That's why it's good. That's why you look at you just look at the different indices to kind of form a holistic picture of what the market wants to do, because the market isn't just ES, it's just the market, which so looking at ES and NASDAQ together is helpful for getting a bigger picture. So what I kind of want to do is I want to see some like a rejection and go some aggressiveness through this 4-hour fair value gap. Gonna wait on the opening range and see how that plays out. This is what I was looking to do. Okay, so we also have this decent sized opening range gap. So you can see on the 15-minute, I outlined this as a sweep of buy-side liquidity. I was kind of, like I said, I was hoping before 9 a.m. when we were kind of like right around here that we didn't take that high. I feel like that would have been really bearish, and that would have constituted the buy-side liquidity sweep. But we can just move that to right here. So if we see this 5-minute structure right here on the bottom left, the 5-minute, if we were to show aggressiveness below this low, I would like to think that as a sweep of buy side. Earlier this week, I think it was like Monday, I did get caught up and, we had a really aggressive open. It was when we first entered this daily fair value gap, like back on Monday. And when we got to it, I was like, okay, we got to our target. Like, it's going to reverse. And I was trying to take shorts. It was like a very similar situation to right now. It was like we got to the higher time frame target, and I was like, we got there, and we're looking for lower prices, so it's going to go lower right now. But it doesn't have to go lower as soon as you think it's going to go lower. It can happen usually anytime. So I was trying to take shorts, and I was essentially trying to catch a top. And I remember I was looking back on that in my journal, and there was no break in structure on like anything higher than the 1-minute chart. And looking back on that, I was like, I should have been a little more patient in that, watching that structure, or waiting for that structure to shift on the 5 at least. Gotta wait for it on the 5-minute at least. I think there is a bullish case today. With yesterday's close coming down like below these lows and then wicking, like, so it came down and then retraced back up and closed above this new week opening gap. I think, and like coming into this hourly fair value gap, that was just a wick. It looks like it came to about consequent encroachment. You could view this as like a sweep of the sell side to go higher. So I think there is a bullish case today. Again, that's like on the 1 hour. I think there's also a bear case. So we could swing both ways. I mean, on the daily again, I'm bearish. I think we're going to go lower off this fair value gap, this daily fair value gap, which, is something ICT has also been saying. But I think on the 1 hour, I wouldn't want to enter. I want to see this opening range. I was going to say, I was almost going to say I wouldn't want to enter until we got above this high. I think I wouldn't be not bearish. If we got above this high, I would not be bearish. I'd be like, I don't think there's any bearishness in this market getting above this high on the hourly. But we're going to watch this opening range. I am watching this low, high, lower low break. So this kind of breaker structure, it's like a bullish breaker structure with this low, high, lower low. So I want to be cognizant of that. But see how our candle bodies are staying within this opening range. If we start to leave this opening range, I will like longs for the 10 o'clock hour, depending on how aggressively it leaves it. Yep, there you go. So again, this high right here would be a buy side liquidity pool, which isn't that far away. Be that high, then that high. Now that we're leaving this opening range, I'm liking upside price action a little more. But again, we're going to wait until 10 o'clock just to see, because you never know. It could always come back and want to fill this in. Could even wait. It could save it for the afternoon. But for example, if all these bodies, see how these bodies on the 1 minute were respecting the opening range, if they continued to respect that and then it broke lower, I think that would be favorable for shorts. The dollar also. I'll go to the dollar real quick. On the daily, so this top, the dollar is looking pretty bullish, which means bearishness for indices. I think it's displayed on the 4 hour pretty nicely. So we were retracing, we had all this run up. We had like weeks of upside in the dollar. And then last week was a down week. It was kind of like this retracement. And then this week, I don't know if, this week it's printing a bullishly, it's looking like, but I'm noticing this looks like a sweep of liquidity right here in the 4 hour. And now we're going higher. So we just barely touched this inefficiency, this weekly level. We just tapped into it a little bit, but I think ICT called out this buy side liquidity, and it seems like it wants to go up there in price. So on the daily, we can see we take out that low. It looks like we want to go higher. So maybe it saves it for next week. Probably might be likely that it waits until next week to get up there. And today could just be a small dollar day. We don't know, but I think the dollar is still looking bullish, which means bearishness for indices. But that was remember, we just broke that down on the dollar on the daily time frame. So that just lends to our daily narrative for ES and NASDAQ of, leaving this orange area to go lower. It doesn't have to do it today though. Could save it for next week. So let's try and make sure we watch price as it's happening right now. watching. So NASDAQ, remember I said on these, these pre-market highs on NASDAQ looked very, very clean. There was an SMT divergence. The NASDAQ didn't have a higher high here, so it made sense that it wanted to go up and run this liquidity one more time. I'm watching this on the 1 minute, this SMT divergence. So this was a higher high for ES right here. This was a lower low, or a lower high on NASDAQ. So ES is looking like the leader, stronger to the upside. On this daily, the way things are printing right now. But I do like that in terms of if we start on the 5 minute breaking this low. Because for NASDAQ, it showed that it just wanted to get up there to sweep this liquidity. Didn't make the higher high, made a lower high. And then if NASDAQ comes and takes out this low, NASDAQ doesn't seem to have this, see these, I know it's a little scrunched up, this swing low right here. NASDAQ doesn't have it. That's why I'm trading ES, because you know, if we were to break that swing, that swing low gives you a shift in market structure to watch. And for me, getting that would give me a little more confidence on taking a trade to the downside. So we have this SMT divergence on the 1 minute right here. We have this swing low right here. So if we were to get below it, I would like downside price. I'm watching this. Seems like it's acting as an order block. Price came down. About mean threshold of it. I still think as long as we're kind of hovering above this opening range gap, I'm still kind of expecting upside price. And again, it's the taking out of, if we get through this down close candle and this swing low, I would then start to think we're going to see the bottom of that opening range gap. But again, it could save that. Could save that for later in the day. We could have a run up to this liquidity up here in the morning. And that, I think, let me look at NASDAQ. Yeah, so that would also be up there on NASDAQ. Our opening range, our new week opening gaps are so, we have a lot of them in this one area. So I wish we could just say, oh, we're definitely drawing towards that new week opening gap to the upside, but we have like 3 in one area. Look at, these are all new week opening gaps, these gray lines and ES, and they're all just So close, it's hard to even tell which two are related. Some of them are inside of one another. Again, I also like downside because remember NASDAQ had those, they were perfectly equal lows, and one of them was the previous day's low. So that is some juicy liquidity that's waiting for us. We do have consumer sentiment at 10. So it would be really nice if we saw consumer sentiment released at 10 and we saw an aggressive move lower. And we saw that's what pushed us down. dollar looks like it's kind of going sideways. If the dollar came up and took out these highs, yeah, downside would be nice. Okay. I'm watching to see if we take this high. Now that we're getting closer to 10, if we start to close candles above this high on ES and on NASDAQ, I will be a lot more likely to say that this high is our drawn liquidity right now, this buy side high. Especially the dollar looks like it wants to retrace a little lower. It's going a little sideways. Okay, so we're getting that high taken on NASDAQ. Let's see how this 10 o'clock candle prints for the consumer sentiment. If we take this high out, I'll probably remove this SMT, because then I call out the SMTs because you think of it as, a purge of liquidity. It's this crack in correlation because it's taking liquidity. So if we go above it, that's not really true. That theory isn't true anymore. Didn't happen to take liquidity. It was actually just a higher high in bullish structure. But look at this. See these tops of these wicks? They stopped right at consequent encroachment of this wick. So I stopped right at the consequent encroachment. Looks similar for NASDAQ. I know it's really hard to see the wicks on this gray background, but looks like the wick on this candle also stopped at the wick on this. Got 1 minute till 10. Okay, dollar spiking up, dropping. I want to see if we get multiple, like 1, 2 heavy down close candles. Is it a down close candle that just wicks back up? That's what I'm paying attention to. I'm watching the dollar, seeing how the dollar is making a new high right here. NASDAQ's breaking those lows. ES is going lower. Looks like we're stopping just short of consequent encroachment of this gap. Yeah, so I wanna see how the next 1 to 2 candles print. Do we make a fair do we create a fair value gap here? Do we enter into it? Again, you know, we still have this, we were kind of talking about this bullish narrative before this, so it could have come down here, stop shy of consequent encroachment just to go higher. See this wick on this 15-minute. If we get above these highs, I will really like upside price. Yeah, so the fact that it just came down and then closed and it didn't create a fair value gap there, that makes me not think we're going down, you know, because if we did want to go and raid sell side liquidity, it would show a lot of displacement to get there. So now if we came down, if we start going up, you could say this is a bullish order block. I want to see us take these highs for upside price. It's looking like a good wick on the 5-minute. We wicked in to this 4-hour fair value gap that was keeping price down in the pre-market, came up above it. Now it seems like we're using it kind of as an inversion. Again, so for the silver bullet, we're going to be looking for the silver bullet at 10 o'clock, which is a fair value gap. We have liquidity on buy side up here. We have external range liquidity down here and a daily candle low. Okay, I like how, so we had this big down close candle, then we had a big candle, the up close didn't create any fair value gap, but then we didn't see it continue upwards, so now we're heading back down. We got the dollar, I'm watching the dollar here, this yellow line in the background. Dollar looked like it's starting to make higher highs. It made this one higher high, but now it's going to make another higher high. So then we'll see if that's going to start an uptrend, to use retail terms. Yeah, it's been a pretty sideways open so far. You know, this is the 9:30. We haven't really moved much. I'm watching the dollar. So the dollar didn't make that higher high. Seems like it's going down. On the hourly, we have, you know, that breaker structure stands true on the hourly too. We have the low, high, lower, low. See this, the top of this candle's a wick. Seems like this hourly candle came down, touched it, which is also coinciding with this fair value gap. So on the hourly, we have a decent upside narrative. And it holds true on the 15-minute too. So this would be that breaker candle. Came down, touched it. It's been pretty sideways on the lower time frames, so we haven't had a fair value gap form yet in this 10 o'clock hour. I feel like you could strongly call out either side right now. It could either be bullish or bearish. I think it's weird. The daily, we're still following that daily narrative of we're going to see downward price based off of this orange area. But then on the hourly, I just said, that hourly structure looks kind of bullish. The hourly looks like we want to take this liquidity up here. Then on the 5-minute, hourly and the 15-minute look bullish. But then on the 5-minute, I'm watching this swing low. I want to see if we start to see a downside, some more downside. Dollar is just going completely sideways. Dollar is not helping us much right now. Okay, so I got a small fair value gap forming there. Okay, that's some good displacement. I'd like to see this close, a 5-minute candle close below this swing low. Dollar, it's looking like it's going for that new high. I'd sell one there because we can get a nice tight stop loss at the top of this candle. But I am wary of how the midpoint of this opening range gap is holding off price. See, the body's closed right there. Let's see how we react to this fair value gap. If we close above this fair value gap, I'll most likely not like this long short. Again, we can kind of outline both sides of the market right now. So on the 15-minute, it's still looking like, we could be coming down into this fair value gap right here to send it higher. We still have this bullish breaker on the 15-minute. So if we get a 1-minute close and we don't show any respect of this fair value gap and we close above it, I'll probably exit the trade, and then we'll see how it responds to the upside. Watching this 5-minute, see these 5-minute wicks, got a lot of 5-minute wicks forming. taking this one because it's been our first fair value gap coming into 10 o'clock, and we do have a narrative for the downside, but like I said, we also have a narrative to the upside. So if we were to disrespect this fair value gap and close above it, I think upside price action would be warranted. Looks like we want to go down. I want to see us come for this low. Again, you can see on the 5 minute we're kind of having trouble closing in this 4 hour fair value gap. On the 15 minute, it's coinciding with this breaker structure. And this, I'm outlining a lot of bullish narrative while we're going short, but again, we're just being nimble. We're going to be nimble here. Going in light, one contract. See, it can always go just to the, whenever it's your take profit, it has to go over a tick, but if it's your stop loss, it'll bounce you out quick. Okay, so let's see what we do. We got our first low hanging fruit objective. We got 5 handles. Let's see. The price didn't want to continue through it, so that's interesting. The dollar is just sideways. Still got a sideways dollar. Okay, so I'm gonna label that our silver bullet. We got 5 handles out of that fair value gap. That's fun. I'm watching this unwillingness to want to drop here. So I just outlined that bullish narrative. If we start to see price get exaggerated and take out some highs, I'd probably look for a fair value gap to enter long on. That would, we have this 15-minute structure here. We have a fair value gap inside of a breaker, inside of this 4 hour. But if we started to get to the bottom of this opening range, which would be below this 4 hour fair value gap. So, I'm going to outline these levels. Just keep talking about them. So right here we have this bullish breaker structure. It'd be really nice because if we got below that and closed, we'd be closing below a breaker. We'd be closing below this 15-minute fair value gap, and we'd be below this 4 hour fair value gap. So all that bullish narrative that I was outlining would just be gone. And we'd be at the bottom of this opening range gap. And it could. And I would like the idea of seeing these lows. And I'd like the idea of seeing those lows, and we would still be we'd be at about 50% of that. So entries would still be valid. Dollar looks like it's chopping its way to higher highs right here. Okay, we're getting more downside. Yeah, downside's looking good. Looking good. Had us hesitant for a moment. We're at about 8 handles right now. We're below 50% of this opening range gap. Let's see, that's our second fair value gap formed in the hour. So you could technically re-enter there if we wanted to pyramid lower. Gonna hold off now. I haven't been taking that many trades this month. Or maybe not this month, but the past like 2 to 3 weeks, I've been trading like 2 times a week. When I started this YouTube channel, it was kind of like a big hurdle for me mentally in my trading. I noticed it it was hard to trade and live stream at the same time and like stay focused. And so we started off the YouTube channel strong. Then we went on a little bit of a losing streak, and when the losing streak was happening, I took some days off, needed to clear my head. I took a few trades that weren't live streamed just to remember what it was like to not do that. But now we're back. So the account's still in drawdown, but we're working our way back out of this drawdown. And when we work our way back out of this drawdown, I'll start to put on more contracts. We can get the ball rolling, maybe get things a little more exciting. And what we'll do is we'll start doing things like taking second entries on stuff like this. So, and we'll maybe take a second entry and see if we can get some higher runs. Again, so this low-hanging fruit thing, even if you have all successful traders, everyone who trades has losing streaks. If they don't have losing streaks, then they're probably lying to you, or they just haven't been trading long enough to actually have that experience. But when you do have losing streaks, even if you've been profitable and you've been successful for a while, doubt does start to creep in. Sometimes you feel like, damn, have I lost it? Or even like the market, like the past 2 years past year has been way harder to trade. So sometimes you start to doubt your abilities. And you have to do things like doing things like this just gets your confidence back, like little base hits. So it's like 5 handles, boom, get 5 handles, confidence back. Just build that confidence. And then what you can start doing is at the same time making sure that you're dialing in your focus and you're journaling and staying on top of everything else and your strategy. I think I started to like kind of veer away from the strategy, and I wasn't really focusing on I think when I was looking back on that losing streak, when I started live streaming, I was getting too detailed in the minutia of like explaining every PD array I saw and what I thought about it. And I wasn't really I wasn't zooming out and looking at like the liquidity, and I was getting too focused and trying to talk to whoever would be on the other side of this live stream and explaining price. And then I'd kind of like run into analysis paralysis. And it was just kind of messing with my head, feeling like I was talking to someone and explaining things to someone. And while I'm doing that right now, when I was reflecting back on that losing streak, I was kind of telling myself, like, I'm not doing this YouTube channel for like signals or anything like that. Like, I actually didn't even think about it. I technically don't need to live stream to accomplish what I want on this YouTube channel. I could just record myself trading and then post it afterwards. That would accomplish the same goal that I have. And part of me started to wonder if I should continue live streaming, but I started live streaming, so here we are. I'll try and see it to the end. Anyways, I don't know if that was a tangent, but I was just reflecting on like getting really low hanging fruit objectives and like why we're doing that. We're doing that because we're in drawdown. Then I was explaining why we were in drawdown. And now that I was able to kind of pull myself out of that losing streak and reflect on why it was happening, now we can start to focus on building this account back. And then once we get into profitability, I'll start scaling it. But that's also why it's important to start small. I wanted this channel to be realistic for break-even traders, people who aren't trading 6, 10, 15 handles. I feel like you see a lot of that on like whether it's trading Twitter or YouTube. They're like putting on big size, or they're saying how much money they make. And I want this channel to be more realistic for like beginner level, entry level traders who are going to be trading one contract, two contracts. And there's a struggle when you're only trading one contract and you say, do I take it off at my low hanging fruit objective, 5 handles, or do I let it run? And then when you let it run, or when you take profit and it runs without you, the emotions you feel when price runs and you're not a part of it, but you were in that trade. And yeah, I just feel like that's a more realistic view of trading. I want this to be more realistic. I don't want it to be like a sensational view of trading. So I say all that to say, we're starting off small, and it's good that we started off small because I've never had a YouTube channel before, so I've never live streamed or even spoken my trades out loud. So entering that new arena and trading, especially since like it's not like I've been trading for like 10 years, so it's not like I have this huge foundation to go off of. So this new environment of live streaming did present a little bit of a hiccup in my focus and my mindset and how I was going about executing these trades. And it was a hiccup in a way where I did experience some drawdown and a losing streak. So it was good that we were starting off with small size, because now I was able to reflect on why that was happening, stop it early, and I was able to pull myself out of some drawdown. The goal is, I think we can confidently start pulling ourselves more out of this drawdown, but it's going to be slower because we're going to only use one contract. So for example, if we have 2 contracts on, I could have taken profit at the 5 handles, move my stop to break even, and then what we would be doing is we'd be sitting in this trade and outlining our lower levels of sell side. So having 2 contracts will get us start to expedite this curve. Remember, it can always expedite in either direction, to the upside or the downside. I think when the losing streak was happening, I was using 2 contracts out the gate of this YouTube channel, and yeah, so then I dropped it down to 1. We're gonna get some base hits, work our way back up, and hopefully we're out of that losing streak now that I've kind of reflected on why it was happening and the hurdles around live streaming and explaining my trades out loud. So we're still making lower highs and lower lows, so that's good. I like how we're at the bottom of this opening range gap. It seems like we came back up to 50% of it. The bodies crossed over it just a little bit, but then we came back down. I think when we start to leave, the dollar's also going higher. Look at the dollar in the background, this yellow line. That's a great sign. I think when we start to leave this opening range, we might see some more acceleration to the downside. Specifically this sell side liquidity pool right here. Yes. I think I might wait to take another trade. I do want to take another trade because the more we get to the bottom of this opening range, the more confident I am that we're going to see all these sell side liquidity pools. And if you use a fib, we are still above 50%, which means we could be taking entries. But I think I'd want to see a little more confirmation, just because we have this long run up. And even on the 15-minute, if you look at the 15-minute, this could still constitute just a retracement to go higher. So yeah, we did get this quick scalp to the downside, but that could have been a scalp to the downside on this 15-minute level retracement to go higher. Again, I'd want to see us leave this opening range and start closing candles below it. The opening range opened up here. So what we did was we came down into it a little, but what we're doing right now is we're delivering sell side to the opening range, and it'll still want to deliver buy side. I mean, we chopped our way through it pretty nicely. So I'm curious as to what, for example, ICT would say. You know, we delivered downside. Would he say it's not balanced yet because we haven't delivered to the upside? But we did chop our way through it pretty balancedly. So yeah, I wouldn't be surprised. Like, we could come all the way down to the bottom of this and then reverse back up, and then it could sell side, buy side deliver, and that would also still be happening while respecting, say, this 15-minute fair value gap. So on the 15-minute, we can still outline that buy side narrative. This fair value gap, I mean, if I was trading the 15-minute chart right now, this fair value gap would be a nice entry long. It's at 50%, so it's at a discount. Come up, sell it at a premium. We had all this run up. We had this run right here, take out that pre-market overnight liquidity. So there's still a buy side narrative that could be, like, you can see this is our swing low. So yeah, this is a swing low on the 15-minute, and we kind of targeted through that for that scalp, but I wouldn't be too confident on the 15-minute that we're seeing lower prices until we get through this fair value gap, like close below it. Dollar is going higher though. Yeah, so the dollar is going higher. Just wait and see. Yeah, so I'm interested to see how price behaves off of this, the low end of this opening range gap. If we start to come up and take out some of these highs aggressively, I think that bullish narrative we outlined would start to play out. Like if we saw like a bunch of these candles, I'd want to see like 4 candles of these size. No wicks. NASDAQ still melting lower. Yeah, so this was a fun analysis. Seemed pretty classic, even though it was kind of wasn't the prettiest of deliveries. We had the SMT divergence. We had the shift in market structure on the 5-minute here. We took the first fair value gap that formed. I think what really sold this to me was this large down close candle. And at the time on the 5-minute, it wicked because we had this next candle that came right up. It was a nice big wick on the 5-minute. So part of me wasn't 100% sold yet. And then we had, these 2 down close candles made a swing low. We had an up close candle. And it was, part of me was wondering if this down close candle right here was just taking liquidity and it was going to turn into a bullish order block. And I was waiting to see if the next few candles after it were going to print up. And when they didn't, we made this other swing low and then broke it with 3 consecutive down close candles. That's when I was like, okay, this is the first fair value gap of the hour. We had the shift in market structure on the 5-minute and on the 1-minute. Let's enter it. So we entered it. I didn't like how the candle bodies came right up to the tick. That always sketches me out, but you can see the algorithmic delivery right there. And then we came down, delivered 5 handles, and we got our silver bullet. I want to see how far it went. It actually, so you could have got 10 handles out of that. That would have been sweet. I think it's interesting how we haven't seen the bottom of this opening range gap and we're turning around. See that? We wicked right into that 5-minute or 15-minute fair value gap I had. Respecting this one. Entered long ES, yeah. I do like the idea of longs kind of right now. I think the 15-minute is putting out a pretty nice bullish narrative. And the 5-minute kind of as well too. 5-minute could go either way. The 15-minute is definitely looking bullish, as well as the hourly. I think we might get all the way up here to this buy side. The hourly candle is looking very bullish. I think I was saying, if we started to see a lot of big candles taking out these highs, I would maybe take the idea of going long again. I would need to see something that's like super convincing since we already got the win. We already got the win today. I don't want to portray too much greed on this account, especially because this account and this YouTube channel, I want it to outline like consistency in trading. I want it to be like, I want it to emphasize that people need to just look for getting small wins every day. So we already got our small win today. 30-minute. I used to have the 30-minute up here, up on my like quick stuff, but then I had way too many time frames up here, and I would notice I've spent too much time cycling through them, and I'm one of those people who would like have to look at all of them, and I'd have to like, yeah, coming down, it's downside delivery. You know, it's interesting you say that. Just the other day, so I don't, at the beginning of this live stream, I kind of outlined why I'm bearish on the daily. I think we're going to use, I know this is kind of sloppy to see. There's a lot going on. I thought we were going to use this orange area to send it lower. And I was kind of looking at the 4 hour, and I was like, the 4 hour looks like an accumulation to go higher. So this morning I was just wondering, I was like, interesting, like is October going to be a higher or lower? Like, what are we doing here? I think on the weekly we just stopped short of the weekly high. I need to get these liquidity things off here. The weekly high stopped short of 50% of this gap. So I feel like that's pretty bearish. And the weekly high just tapped in to these two up close candles. So it's like this bearish order block. I think next week is going to be the real tell. Next week, we're either going to see, we could just see like a doji, but I think this is a really interesting point. We could go higher, we could go lower. I think this daily high, this is either going to be the turnaround point right here. This is either the top, like the intermediate top, or price is going to shoot above it, and that's just going to be like an order block. But we are closing. It looks like we are closing the day below this fair value gap, which I think is a good sign for bears. But then, yeah, like you go on the 4 hour, I feel like that looks like an accumulation to go higher. Okay, yep. So we're kind of melting down now. Not really melting, we're actually going decently. I'd want to see us close below this opening range gap before I am convinced that we're going to go lower. Wow, I don't want that to happen. Oh my god. Okay, I guess the dollars, I want it to move it lower, like right there, yeah. you notice on the 15 minute. So this big down close candle was a fair value gap on the 15 minute. What happened right here at this high was we wicked into it, and now we're going lower. So I like that for lower prices. Okay, so we just touched the bottom of this opening range. NASDAQ is looking heavy. Oh, I didn't want to do that. I wanted to lock it. Yeah, now that we tapped into this 15-minute fair value gap, I'd expect it, if it was drawing down, I'd expect it to get pretty heavy. So let's see what happens. Have sell side. Right there. The dollar's also seems like it's still going up. I wouldn't be long unless we were over this swing high. ES has a good buy divergence. Yeah, I think the 15-minute is still looking good for upside structure on ES. The dollar would make me hesitant to go long just because it seems like on the 5-minute it's making higher highs now. You know, we took out this high here, low. Now it's making a higher high. Touching the bottom of that That candle touched the bottom of the opening range gap perfectly. Being wrong is what a stop loss is for. You cannot always be right. Okay, if we start to get some closes outside of this opening range gap, I'd like downside. Rising dollar. I'm going to take a look at NASDAQ. NASDAQ's looking bearish as hell. Okay, you had this sweep of buy side. We have these perfectly equal lows, which is also external range liquidity, previous day liquidity. We're almost there. NASDAQ is looking bearish. But at the same time, I could see NASDAQ taking those lows, and because ES is so far from this low, and especially this one, I could see NASDAQ sweeping those and ES not sweeping those. I guess that's probably where that divergence you keep talking about is coming from, is ES is to the upside, making a lot stronger structure. NASDAQ's kind of sideways ever since yesterday's low. So like I could see NASDAQ sweeping these lows just to turn around and go higher. And then ES never even comes close to these lows and just takes off to the upside. But we'll probably wait. My like I said, my higher time frame narrative, like on the daily, is we entered this daily fair value gap to send it lower. So I think these lows and into next week even lower is likely. That's what I'm hoping for. It's what I'm outlining in my narrative, especially with the dollar going up. Yeah, so in the future, hopefully soon, it'll be nice when we start trading with more contracts. We'll enter 2 or more. We'll sell at the first low-hanging fruit, and then we'll move stops to break even, and we'll just wait for these larger target liquidity pools. Part of me today, going into the day, was thinking about doing more contracts. If we didn't at the open go above this high, because I would really like that bearish, that setup to the downside. It's because when we got above this high on the 15-minute, there was a strong outline for upside. There we go. Taking that next sell side liquidity. The next sell side is down here, which is the top of this new week opening gap. Where could we enter again, possibly? Entries, I think we're past the point of entries. But like I think I even said, as soon as we start to close below this new week or this opening range, we'll probably get pretty heavy. Which did happen. Part of me was hoping some kind of entry on the 5-minute would have formed, because I would have felt a lot more comfortable taking that. But we got the direction right. We got the direction. We got the entry. And yeah, this is one of those examples where it's bittersweet if you're trading with one contract. But I'm going to log off. Enjoy the rest of your day, Dodd.